Hi guys, so in today's video we're going to be going over Monday's trades. I had two trades on Mondays and I had two trades on Monday in literally one session and they were both wins, so they were both in during New York session. So we'll go over that and we'll talk about why I took those trades and why I didn't take a trade in London session. Well, to be completely honest, I actually don't really remember the exact confluences, so we'll just go over the charts as if it's Monday. This is that Monday candle right here that we're looking at. So we had two trades within this session. I had a long and then I had a short as well. So going into Monday, we can see we were very bullish from Friday. So for me, instead of expecting a retracement straight off the bat, I'll expect it to continue that bullish momentum actually, because it closed really bullish and we have to create a fair value gap as well. And we also have a lot of liquidity at the top. So we have this target here, we have this here, and we also have this target here, which leads into that daily fair value gap. And we also have a weekly fair value gap there as well. So this is actually a really strong draw on liquidity here. And these are all very high time frame liquidity points as well. So they're also, all three of these are very higher time frame draw on liquidity. So on Monday, that's what I was expecting. I was expecting it to just keep going up and keep taking out those highs. Going down to the 4 hour, what we can see here is that we got this 4 hour fair value gap here that we tapped into, I think, during London session. So we tapped into this 4 hour right here. So that itself is enough for me to continue going higher, because it doesn't really need to go all the way down this fair value gap. You can see that it ended up tapping this fair value gap towards the yesterday, which is towards the end of the week, but you don't really need to go all the way down for it to go up, because on the daily, as you guys can see, we had higher time frame liquidity at the top. So that's my 4 hour fair value gap there to continue that bullish bias. We respected it, so that was good. And then now here, we swept this low right here, and we ended up going up during London session. So I didn't actually catch this trade because I didn't know if it wanted to go all the way down here or not. But here obviously we got that 4 hour fair value gap respected, and I don't remember what I was doing, but I probably missed it because I was doing something else. So I completely missed this trade, and that's fine, but you probably could have had another trade here as well to go up, because it was really clear that we tapped into a 4 hour fair value gap and we had a really clear rejection here, but that's fine. So during London session, we got a very clear rejection. We got really bullish signs. So that is another sign that we can just keep going with the bullish momentum. So during New York, that's what I did. So we have this big 1 hour fair value gap here. That's my higher time frame, and we tapped into it, and I just waited for a 5-minute fair value gap, I think, for that long. We got this 5-minute fair value gap here, and I entered when we went into that, and stops just below that. And the reason why I didn't enter here, even though I could have, is just because that was not during New York Q zone. So New York Q zone starts at 7, so that's when I started looking. So if we look down here, we probably could have entered here as well for a trade here when we created this fair value gap, but that's fine. So that's the first trade that we had. So I targeted that high right here, which is the first high, but I could have just left a runner and targeted that high as well. So that's the first trade. And the second trade is actually right after. It's like around 11. It's based on the premise that we tapped into that daily fair value gap, which is also a weekly fair value gap, and we swept so much higher time frame liquidity. It was sort of like a retracement trade, but also sort of like a reversal trade, because we've already cleared out all the liquidity, right? So what we want next is for it to go lower. So I caught pretty much the high of the move, and there was a 5-minute fair value gap there as well. If I wanted, I could have even held all the way down here, but yeah, this is probably sort of like the one shot one kill kind of method. This is the high of the week basically. We got this 30-minute fair value gap here, and if you guys can see here, we got this 30-minute fair value gap here that we formed, and we re-entered it. It's probably also a 1 hour, no, not 1 hour, because it was all during that time, but we got an SMT there, we got a 30-minute, and then we also got a 5-minute. So we have this 5-minute fair value gap here, so we just waited for it to enter that fair value gap, and we entered there, stopped just above this order block right here, and targeting all that all the way down there. And this is sort of like a overnight trade, For me at least, it was overnight time, so yeah, I just kept that. And then I took my stops out here because we were entering New York kill zone for the next day. I had no trace during London that day. After this, I just took it out because it was probably going to retrace, and I didn't want to go through all that because I have to pay fees for overnight as well. So that's why I didn't want to hold off all the way until here. So I took it out here at around like one of the probably one of the bodies of the higher time frame candles. So just to recap over both of those trades, the draw on liquidity for these two was just all these liquidities here. For the first trade, we had an entry model of a 5-minute candle for both trades, and for the higher time frame for this one, it was a 1 hour and a 30. There's also a 30-minute here if you guys can see, but there's the higher time frame for this was that SMT and that 30-minute candle here, 30-minute fair value gap, and the draw on liquidity for this was just one of the bodies here, because it was probably this body here, but I didn't hold all the way down here. I think I just took it off at one of the lower, maybe at a 1 hour body. I took it off at this body here, which sort of overlaps with the weekly open, which is why I ended up taking it off there because of the timing and because of that pricing area. So that was the draw on liquidity for the second trade. But overall, it just paints a really nice picture of price wanting to clear out liquidity and then reversing. So this is that retracement. This is a time where it's okay to take 2 trades. And if I called the London move, it was probably also okay to take 3 trades in one day, even though it would have been risking 1% per trade, which would have been risking 3% technically on the day. But I would have totally allowed that because they were all according to my plan. And they were all not impulsive trades. They were all with proper confirmation, with proper higher time frame confluence, with sweeps of liquidity. We swept liquidity there and there. We swept liquidity here as well on the lower time frame. So they were all like proper trades with all proper confluences. So none of them were impulsive and unnecessary. So yeah, I think that's why. See here, we got this liquidity sweep here. There was probably even an SMT here, I'm not sure, but before this, so there was a liquidity sweep as well. So all of them actually had proper confluences, so that's why it was okay to take those trades. I hope you guys enjoyed this video, and I'll see you guys in the next one. Bye.